Sure, bringing it all together is Tom Piotrowski for a look at the markets this morning. How are we shaping up today, Tom?
Pete, not well. The futures are pointing to a decline of around 0.75% for the ASX 200, so that'll eclipse yesterday's gain of 0.7%. We tended to see downbeat outcomes for US and European stock markets last night, even though the economic news was quite good in some respects, but I suppose it just wasn't enough for investors to have their concerns allayed when it comes to what's going on in relation to the trade picture at the moment. So one of the stories that's got a lot of currency presently is that the European Union is preparing a package of retaliatory tariffs to be applied to US imports. So that was one factor. Also, we had some inflation numbers in the US which were reasonably good at first blush, but again, in the context where you could potentially see tariffs escalate again, it just wasn't enough to lure the marginal buyer back into the market. You had the S&P 500 down by 0.25%. The Dow Jones was down 0.8%. Technology bucked the trend with the Nasdaq up 0.2%, and there's an important reason for that. The Trump administration has lifted curbs on chip makers selling their products into China. So Nvidia, for example, was one of the beneficiaries of that. The stock up by around 5%. So that was one of the positive sides of things last night, with chip makers doing quite well. But banks, on balance, tended to deliver disappointing earnings numbers. We saw Wells Fargo lower their expectations for net interest income as far as the next 12 months is concerned. That stock was down by around 5%. So they're just some of the moving parts that contributed to that weaker tone in the Northern Hemisphere.
All righty, Tom Piotrowski, thank you so much.